is Julio Gonzalez with Your Money on the Your Voice America Network for one of our premier shows. And I got a great crew with me tonight. DJ Van Kuren from Denver, Colorado. Say hi, DJ.
Hi, Julio.
And of course, the infamous Bill Mitchell.
Bill? Infamous, that's the word. Yeah, absolutely, folks. Great to see you. This is Bill Mitchell and Julio. Thank you for bringing this new show to our network. We're very excited to have a show about real estate, taxes, and finance on the Your Voice America Network. I think it's going to be really fantastic.
Well, Bill, we'll try to make it fun. We'll try to make it sexy. It's hard to make taxes and investing and finances sexy, but yeah, we're gonna do our best here.
Fantastic.
Well, Bill, we're going to jump right into it. I think DJ's expertise in real estate is important to the country in terms of, is it still a viable investment under the big changes we had with Donald Trump as president, President Trump, and Tax Reform 1.0. I think it gave a shot in the arm to real estate investing. But, where is real estate investing now, DJ? Where is it today? We have higher interest rates now. Where is it going in the next year? What's the cycle at currently? Let's get your feedback on that.
Sure. Well, the memory of the recession has been slowly fading. However, we are at that point in the cycle where people are asking, what is next? And there has to be a downturn that's around the corner. And that's actually very true. And that's for a number of reasons. Like you said, we have had some rising interest rates. But this isn't the first time that we've seen this. I mean, you could go back 250 years, not only in the U.S., but also the UK and Australia, and you can see that cycles typically run in an 8-year cycle. So with that, we should be seeing a downturn in the next 12 to 18 months. And that a lot of that has to do with the overbuilding that's happening. Also, you've had a rise in construction costs for building all these different buildings, and the tariffs definitely have had an impact on that. But it's also going to create a great opportunity for investing, and then we'll start having another uptick happening to about 2027, and that run after we have a short downturn, which should probably be 6 to 9 months. That's going to be a bigger run than the one that we just had coming out of the recession. So, in many ways, we've got a good long road ahead of us, but we are going to see a dip, and that's not only going to be in real estate, but also in the stock market and business as a whole.
Bill, what do you think about the stock market as you look at investing?
The 800-pound gorilla in the room here is the Fed and raising interest rates. Under Barack Obama's presidency, the Fed only raised interest rates one time right at the end. Under President Trump, they've raised them 7 times in just the first 2 years. And of course, President Trump doesn't like that because he wants his 5 and 6.0 GDP, but really 5 and 6.0 GDP is really unsustainable. And what happens is when the GDP is that high and the economy is that hot, then it gets overheated and you get speculation, and the speculative value of the assets exceed their functional value so much that you create what's called a bubble. And the problem is that banks go in and they lend money against that speculative value, okay? And that money is risky. So in order to assuage that risk, they have to bundle those assets together, and then they sell those bundles. And then to assuage that risk, they have to create derivatives on the bundles. So you build this whole house of cards. So in a way, I would like the Fed not to be raising interest rates because I want that big GDP. I'm a political guy. Trump's my guy. I want him to look successful. But on the other hand, if we can keep GDP right around 3% and steady, and we stay away from a speculative marketplace where really the value of the property as it's intended to be used and the value stay relatively close, that's better for long-term growth where you have little ups and downs. And as DJ said, if we have a dip, that doesn't mean somebody's blowing it or somebody's screwing up. That's just the way it works. In a typical economy, it goes in a sine wave like this, but hopefully the good parts are better and the dips are not as bad. So I'm excited. I think the economy looks good. Wages are rising for not just people on the coasts, not just for the white collar workers, but for the blue collar workers across the middle of the country, because we're bringing manufacturing jobs back, something that Barack Obama said would never happen. We've created 400,000 new manufacturing jobs just in the last 2 years. So I think the economy is good. It's strong. It's broad. And you're going to have a little ups and downs. And the Fed is kind of trying to tap the brakes a little bit. Hopefully they don't go too far. My experience with the Fed is they always go too far. So we'll see.
Well, I wish they would, when they raise the rates, I wish we wouldn't do it 7 consecutive times. I wish we would maybe take a change and wait. I think it's good to see the results, because sometimes it's too hard to put on the brakes, once you've done something that goes downhill quickly, Bill.
Yeah. Well, here's the thing. And this is Donald Trump's problem with the Fed. Because he picked the Fed chairman. Nobody held a gun to his head, okay? He picked the Fed chairman. But here's the problem with Trump's problem with the Fed is that they're raising interest rates, as you said, so fast, and inflation is right around 2%, which is the perfect target for inflation. So, I mean, when I was trading stocks, inflation would get to like 4%, and the Fed would be freaking out and raise rates. Well, when it's 2%, there's really no reason to keep raising rates. And yet the economy is so strong, they've been doing it. So they're really, I could literally debate both ends of this, but I'm afraid they're going to go too far, and people are going to stop buying single family homes. We've already seen a slowdown in the purchase of single family homes, and that affects everything else, because people are like, well, it's getting a little pricey. The prices are up. The loans are expensive. Maybe we should take a wait and see attitude on this. So, this is, you never have an economy that just goes, straight up like this. The stock market goes like this, hopefully long-term trend up. So we'll see, but I think they may be overdoing it. What do you think, DJ?
Yeah, I think that, once again, history continues to repeat itself over and over again. And so, yes, it's inevitable that they're going to, try to slow the economy a little, so they will raise the interest rates. And because there's an inverse relationship with the value of the homes, with what you were talking about, that is going to bring some of these home prices down, just because you can't buy as much as you can when the interest rates are quite low. But, you've got people that are making these decisions. And in fact, what was interesting, I was having a conversation with the owners of the Sacramento Kings a couple years ago, and he had created his wealth in technology. And he was at the White House, and this was during the Obama administration, and he said, we can build this algorithm to identify when we should raise rates and not raise rates, and lower rates, etc. And they totally dismissed it. Of course, that would have had a significant impact on the personnel, but we're at that level of sophistication where we could easily do that, and have some more controls in place.
Yeah, absolutely.
Bill. Oh, sorry, Bill. I didn't mean to cut you off there.
No,
but
you didn't. That's fine.
Okay, Bill, I had a question for you.
Yeah.
DJ said a couple of things. One concerning to me, which is the downturn, right? So obviously, I hate to hear that word. We always like to think of things going up, and up, right, with the new tax reform policy. But then he also said opportunity, because when you have a downturn, obviously, there then comes opportunity to buy in that type of market. So what are your thoughts on what impact that'll have on tax policy going forward?
Well, if there's any slowdown in the economy at all, the Democrats are going to jump all over Trump. It's like, oh, Trump economy has failed. Elect us in 2020. And, that's ridiculous. As a matter of fact, we just got news out today that I believe, I think it was Ford. Oh, no, GM, that's going to be closing 5 plants, in the Midwest and in the Rust Belt. And everybody's like, uh-oh, all the liberals on Twitter are like, the Trump economy is failing. It's like, you guys don't understand. When you see these articles, you really need to read beyond the headline. Because what's happening is that it's actually because the Trump economy is so successful that this is taking place, because Trump has brought gas prices back down. And what happens every time gas prices come down? People start buying bigger cars. They want SUVs. They want trucks. Okay, these are bigger, safer cars. A lot of people have families. They start investing in these cars. They worry less about gas mileage and more about the comfort of the car. So what GM is finding is that people aren't buying their individual cars anymore. They're buying SUVs and trucks. So as in any economy, they're pouring their money, their investment, their time and energy into the SUVs and trucks and shutting down the plants that were making the parts and stuff for the individual cars. This is called supply and demand. This is the way it's supposed to work. It doesn't mean that Trump is somehow screwing up the economy. And overall, I believe, out of all of GM, only 3,000 people are going to be laid off as the result of this. So, I mean, when we're creating 250,000 jobs a month, 3,000 people laid off, I feel bad for them. That's terrible. But this is the nature of how things work in capitalism. You cannot hold a gun to business owners' head and say, you must keep this factory open even though you're losing money on it. So it's just the nature of things. And then what will happen is that oil prices will eventually go back up and then people want to buy those other cars again. And then they'll open the car factories again and the SUV factories will slow down. This is just the nature of the way it goes. And of course, political hay will be made on both sides, but it's up to Trump to lead with boldness and to give the appearance that he's large and in charge and explain to American people how these things are happening, just like I'm explaining it now, so that people will maintain confidence in him and his government, because that's the most important thing, is the economy is really a self-fulfilling prophecy. If people believe the economy is going to get better, it will get better because they will make decisions now because they believe it'll get better in the future that will make it better. If people believe the economy is going to crash in the future, they'll pull back now, which makes the economy crash in the future. So people need to remain confident.
Yeah, I think just as a side note too, just like we're talking about, the real estate market goes in cycles, the stock market, so does business cycles. I mean, you get into I used to live up in Seattle, and there would be people that would continually talk that work for Boeing. They're like, oh, they're doing layoffs again. Well, then all of a sudden they'd have all these orders come in, and then they just hire everybody back and more people, and then they fulfill those orders, and it goes back down, and then they let them go again. And so if there is a supply and demand, like you say, that's going to definitely have an impact as well. And there's often a lag until you see some of these results. And so it doesn't necessarily mean that things are bad. It just means that that is where they happen to be within their cycle of business.
Right.
So DJ, you advise a lot of family offices on investment strategies. What's the strategy right now that you're focused on for the end of the year?
Well, our biggest thing right now going into next year is, we have been selling a lot of our real estate assets, and we've been hoarding, quite honestly, as much cash as possible. Because we do see that there's going to be some great opportunities coming around the corner. And one of those areas is actually in the apartment segment. A lot of millennials have been continuing to go into apartments, but there's been excess building and a significant amount of building. And then once again, with the rising costs of construction, it's going to run into some challenges for some of these builders. And so, within this 12 to 18 month time frame, we see that there's going to be some great buying opportunities. And so, we're trying to be a little bit patient. The good thing about, family offices, unlike an institution or an insurance company, is that it's patient capital. So we don't have to make a decision. And, we're rebalancing, taking a look at where the opportunities are. It's also projected, too, that private equity is actually supposed to have an increase in returns going into 2019 from about 13% to 17% returns on the private equity component. So we're taking a look across the board, but we can't get yield because of these interest rates. So we do have a good amount of the portfolio that's very conservative and traditional, but we're also looking for those opportunities, which, we do feel is going to be around the corner. And, I think back to something Bill was talking about, I think that what's going to happen is that there is going to be that downturn. And then about 6 months prior to the next election, I think you're going to start seeing the economy starting to really, really heat up again.
Yeah. Well, hopefully when they say downturn, we'll stay around 3% GDP, something like that. The beauty of the Trump economy, and this is what economists were saying as they started to heat up, because literally every economist on the planet, when Trump was elected, said he's going to kill this economy. We're going into a recession. It's going to absolutely collapse. And then when it started to do well, some of these economists came forward and they said, we're saying things that we've never seen before, things that shouldn't be happening. For instance, when Trump became president and the Fed ended quantitative easing, and they started raising interest rates, this was supposed to make the institutional investors run for the hills, because basically for 8 years they had free money from the Feds to invest in the stock market. So it became almost like a Ponzi scheme where it could just be bid up and bid up and bid up with this free money. And as long as their buddy across town was able to buy the stock for $1 more than they paid for it, Everybody was making money. So when you have the end of quantitative easing and rates go up, this should have collapsed the market. And yet it expanded. Why? Because of Julio Gonzalez and the promise of tax reform. That was the thing out there. Stock market, buy the rumor, sell the news. The stock market was buying a rumor long before tax reform was overdone that it was going to get done. This is one of the things that gave me great confidence that tax reform would get done, because the market and the smart people in the market were saying tax reform is coming. We're going to have this huge influx of cash coming in. We can do that. So what happened is, corporate earnings started rising. So instead of that speculative bubble of the Obama years crashing down to the fundamental value of these companies, the fundamental values of the company rose up to meet the bubble, almost filled up the bubble from the inside, and the stock market continued to go up under President Trump. I don't know how many thousands of points, but many, many thousands of points. And it's funny to listen to the commentators speak now, and they're like, oh man, this is the worst drop we've seen in the stock market and so on. It's like, if you look at the Trump years, it's like this, and then the last couple months is like beep, 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 like this at the top. So overall, it's still absolutely fantastic. But this is the way things are going, and we have got a whole new economy that we've never seen before. And the reason why I said all that was to say this, that I think we can stay at 3.0 GDP because the economy is very broad. It's not, this is not a bubble economy that's just real estate. It's not a bubble economy that's just the dot-coms, okay? It's not a bubble economy, it's just computers. It's broad across all sectors, and also, it's not just people on the coast that are making all the money, but people across the middle of the country are making money as well. The blue-collar voters are making money as well. So it's very broad, and when you have something that's broad, it's sustainable. It's like a salesman that makes his money on $100 deals, as opposed to one $100,000 deal. If that one deal falls through, he's screwed, okay? But if he has all these deals, then one or two fall through, then he's still okay. And I think that's what this economy is like. It's like a lot of smaller deals all working together. So I think we'll be sustainable. It'll slow down, it has to. Things don't always go straight up, it goes up and down. But I think the downs will be good. I don't think we're going to ever slip into a recession in Trump's presidency. I don't think so.
Well, Bill, I appreciate you talking about tax reform. I'm very proud that got passed. I was proud to be part of that whole process. Yeah. And one of the exciting things that came out of tax reform that most people may not be aware of is the opportunity zones. And that's part of the tax reform 1.0 that basically provides substantial tax benefits to invest in zones that really need renovations and need that recharged energy from outside investors. High risk, high reward, and we've never had anything like it in the country.
Like that, inner cities, urban development, or rural areas. What are you talking about when you're talking about that?
It's all those, and it's one of those phenomenal things that came from tax reform that not a lot of people are talking about. It's brand new. We're all digesting a new tax code, but this was really to bring investment into those areas, those urban areas, and get the renewal process going. I know, DJ, you talk about opportunity zones all the time. If it's a great, really opportunity like it says it is to invest. And so what are investors doing in the opportunity zones? Where does this all stand? And maybe you can tell us a little bit about what opportunity zones are.
Yeah, sure. So like you had mentioned, this was brought up with the Tax Reform Act, and the majority of the information on these zones are out, but there's still some pending questions that we have as to some of the final rulings. But basically, these were areas. There's 8,700 of these throughout the U.S., and these are typically areas that have been underserved. They are lower income areas in a lot of areas. But the local governments were able to choose to say, okay, what parts of the city or the surrounding area do we want to try to give a boost to and, help increase what's happening in that specific area. And so it does vary from state to state, county to county. And they are going off of the old census numbers, which, interestingly enough, actually, in some regards, provides more opportunity because some of these areas might have already started some gentrification. A right. Good area that I like to tell people about is if you go to Las Vegas, you've got the old part of Las Vegas, where it all started. And in that area, which is away from the main strip, that everybody knows of. One of the founders of Zappos had started to develop that area, building some nice apartment buildings, clearing out land areas, making it quite nice, because his ultimate goal is to make that area like a really well-to-do place to go. And of course, the casinos in that down there would also follow, etc. And that happens to be in an opportunity zone. So that's a great area where things have already been starting, and it's going to, pump in additional benefits that are allowable to investors to come in to invest. And some of those are pretty significant. And it's not only for real estate, it also has to do from a business perspective. So if you had a business that you were manufacturing things within, a plant, for example, if you built your building in one of these opportunity zones, you would have some significant tax benefits, which we'll talk on here in a minute. Or if you're, running a company and you were to start that company in this opportunity zone area, I mean, these tax benefits are significant. And, maybe Julio, you can talk to a little of this, but, it has to do with the capital gains that, rather than paying Uncle Sam the capital gains from a sale of, let's say, stocks or real estate, you can actually invest that full amount, including what you would have been writing a check for, to invest into these areas. And, ultimately, if you hold it for 10 years, all that's going to be tax-free at the end of that 10th year of investment.
Yeah, I think this is one of those things where good tax policy creates amazing opportunity and is great for the United States infrastructure. Bill, I don't know if you've been getting feedback on this, opportunity in the opportunity zones, but what are your thoughts?
Well, here's the thing that you're always the struggle that you're always going to run into when you're going into urban areas and you're trying to reclaim these and make these prosperous areas. Is you're going to have a problem with the gentrification area, because you're going to get kickback politically on that, because there are people living in those areas, and so you don't want those people all just pushed out. But on the other hand, you feel the tug of industry wanting to make these better areas better and more profitable. And my one question that I have for DJ is it possible, of course there's areas where they build the high-end apartments and the condos and so on and so forth. This is natural. You can't avoid it. Okay, that's normal. But are there other also opportunities in these zones where you can go in and you can take out the blight? My good friend Bill Pulte is very involved in that. He's taking out scores of buildings right now in Pontiac, Michigan, helping them finish up that process. And you can take out the blight, but maybe build businesses there where the local people could take advantage of the businesses, get jobs and training, manufacturing, and so on and so forth. Have retail establishments. Have maybe low-cost housing the way we think of it, but affordable housing that people could move into and raise their families as well. That wouldn't all just be the multi-million-dollar condos and the high-end things. Is there that balance out there that's even possible?
Well, that's really what they're striving for. They're striving not to displace the people that are living there, but to actually create more opportunities. Meaning, like having businesses that show up. So if you do have a restaurant, you're going to have some significant tax investment advantages when you invest into that business. And then as that business continues to grow, you're going to have significant tax benefits on the other side. And then, yes, you're also going to be employing people during that process. Same thing as if you had a manufacturing facility and you're manufacturing, widgets, and you need employees in order to work there. That's another incentive. It's just not the real estate itself. Now, the one thing that happens with the real estate is that you really have to do a development deal, or you've got to do a major reconstruction of a building where you start with 4 walls. And so you are going to have to make these look new, but unless you go out and buy 2 to 3 blocks, it's really going to be, step by step within that community. But the other thing too is that there's a lot of other tax incentives that you can use with it. You can use what's called new market tax credits. There's also enterprise zones that fall within this as well. And when you're looking at all of that, it can start adding additional benefits to have the employees and everything else. And so they're really trying to make these areas, much more beneficial for the people that live there, and spur that economic growth in certain locations.
Yeah, it's definitely a delicate balancing act, especially with the governments, because a lot of local governments in these urban areas are Democrats. Okay, so if people feel like the gentrification is getting out of control, you're going to get some kickback from that. So it's a delicate. This is why urban renewal in the past has never really taken off, because on the one hand you want to do good for the people, on the other hand you got to make money, you got to attract investment. So where do you find the fine line between that's the art? Trump talks about the art of the deal. This is the art of urban revival. And when Bill Pulte and I talk about it, we don't talk about urban renewal anymore, because that word has gotten so much bad press. We call it urban revival, because we want to bring a revival back to our urban areas. And so many things that are happening in these urban areas, where people from outside the urban areas come in and dump their garbage and their junk and their tires and their old cars and their sofas and stuff on these urban streets, and it just makes it look bad. And you have all these abandoned buildings that are fire traps and have lead paint in them, and kids that go in and play, and there's as dangerous asbestos and all that. And you have all kinds of criminals and gangs and drug dealers hiding in these buildings. When they go and they take these buildings out, or they renovate them, because you don't tear everything down, because some things have historical value. If you can save them economically, you save them, okay, and improve them, or tear them down if they can't be saved. But what they find is when they do this and they clear out the blight, crime plummets in the area. The gunshots at night stop. The rapes and the murders stop. These criminals move out and move elsewhere, because they don't have a place to hide anymore. And this raises real estate values. Okay, so what you can say to these investors looking at these opportunity zones is, guys, if you get in on the ground floor here, just by being here, as we reduce blight and reduce crime and bring opportunity back in the areas, these values are going to go up, just because we're taking the negative away from this thing. So from an investment standpoint, I think it's fantastic. And you can get the tax benefits, and to me, it seems wonderful.
Well, I think one of the things, though, there's a couple aspects here that I don't think maybe they didn't think through. One of them is that if you did have the money to go out and buy 2 or 3 blocks, and literally like Monopoly, you could literally gentrify that whole area instantaneously, where you do have high quality apartments, and you've got a Whole Foods, and you've got a movie theater, and all this other other attractions that are going to attract true communities to come in. Well, that's totally going to displace the people that are there, and which is the opposite of what they wanted. But the other thing too is that, which is the hardest, balance, I guess you could say, is as a developer, your number one reason that you're in business is to make money.
Right.
And so it's hard to have these, low income housing. That's why it's such a struggle all throughout the U.S., because the numbers just doesn't make sense for what it costs to build it. And then you're renting it at these lower rates. That's where the problems like New York City happens, where you've got all these rent controls. Well, because somebody's paying $1,000 and it goes up by $30 every year, you've got to charge $4,000, $5,000, $6,000 to everybody else in the building to make up for that. And so now that effective rent is $5,000 or $6,000, and you want that person that's paying $1,000 to get out so that you can raise the rent, so the building's worth more. So it's definitely a delicate balance. I mean, I think it's definitely a challenge. The reason why they put this all in place is the reason is very sound, and it's for the betterment of the community and the areas. But I still think that it has, you're going to have to look back at this over a number of years to see if it's really having an impact and doing what it's supposed to do.
Yeah, if it was easy, somebody would have done it already. But the fact it hasn't been done means that it's not easy. And, like Julio was saying, bringing manufacturing and bringing factories and bringing, businesses back to this area is absolutely key, because then you can raise the incomes of the area, and you get people off of government subsistence, and you get people, when people are no longer just surviving and they're feeling some self-actualization in their lives, they start taking pride in their neighborhood. It's not just, I don't care how it looks, I'm just getting by every day. But if you feel like you've got a future there, if kids feel like they've got a future, they're going to start taking school more seriously, their education more seriously, training more seriously. So it can get momentum. It can get momentum. And it's not easy. But the fact that we've got these opportunity zones is a great start, Julio, I think.
It is a once-in-a-lifetime opportunity for an investor to mitigate taxation on capital gains. So, like DJ said, there's a lot of risk that goes into these investments, but high reward. And, people are out there doing their due diligence to see how they can make this work, because, again, this is where tax policy and these areas, I think, come together in a way that hopefully can help these communities. And I think this tax policy gives everyone a chance to come together. And, well, it's new, right? So we have new policy. We're working out the kinks.
Yeah.
There's always going to be unintended consequences, but I think it's a step in the right direction to help with the real infrastructure of this country.
Yeah, let me ask you a question. I'm sorry, DJ, I didn't mean to interrupt you. Let me ask you guys a question real quick. I'm going to throw this in as a realistic question. Let's say I come to you guys. Okay, I've got $20 million that I want to invest. That'd be nice if I had that problem. Okay, I've got $20 million that I want to invest, and I want to invest in these opportunity zones. Okay, what do I do? How does it work?
Well, the first thing that this is the biggest question to the whole thing. And the one thing I do want to emphasize, which is sort of part of our old conversation, which I think gets overlooked probably 90% of the time, is that, yes, there's opportunity to invest into these areas for real estate, but there's also opportunities to invest into businesses and manufacturing facilities in these areas as well, which that's really what's going to be spurring that area, which is going to be the jobs, like you had brought up before, Bill. But the biggest thing from a real estate perspective, if you got $20 million that you were to invest in this, and let's say that, $5 million of that you would have paid to Uncle Sam, right? But you don't have to now. You can invest the full $20 million instead of $15 million.
Much better idea.
which is great, right? Because you're automatically saying I'm playing with the house's money. So the next step comes down to going back to the fundamentals. You've got to. It still has to be somebody you're investing in, an operator, somebody that's built a building before in these types of areas. So the first thing you want to do is you want to say, okay, this is great. You want to build an apartment here. You want to build a hotel here. Have you done this before? Or is this your first time doing it? Because if you've never done it before, it doesn't matter whether you're going to get free tax or not. It's still, if they can't implement, they can't implement. So you want to say, have you done this before? The second question is have you done it in these types of areas? And there's a lot of people that they've been doing these types of developments in these types of areas for the last 10, 20 years. To me, that is a perfect partner to give your money to, because they already know what they're having to go through and what they're having to do. That's the first thing. The second thing is it a good investment opportunity in general, right? So if they come and they say, look, we're going to get a 4% return on this project, well, there's some other places you can put that money, which is going to be a heck of a lot safer than worrying about somebody if they can build this building or if they can reconstruct this building that only has 4 walls. So you've got to look at the investment itself. Right. So you got, can that person implement what they're supposed to do? Do they have the experience to do that? Do they have their own money that they're putting at risk, which is very important, right? Because you want somebody to make sure that if you're going to lose, they're going to lose as well.
They've got skin in the game, in other words. Yeah.
That's right. That they don't, because they're not going to want to lose it. And then third, is this still a good investment? Because just because it's within the zone doesn't mean that you could take that $15 million that you after your tax and invested into something else that you could have ended up, doubling your money and ended up with $10 million more from that investment from then putting it into this opportunity zone. So I think you've got to stick to the fundamentals is the real answer, I think, to this question.
DJ, we've been talking about the opportunity zone and these tax benefits. So, are these tax benefits for the billionaires, the millionaires? Is it the common person, mainstream investor? Who's it for?
Well, it depends on. There's one side. There's two different sides, right? You got the investor side, and then you've also got the small business owner in general. So on the investor side, whether there's individual projects which are called opportunity zone funds or multiple projects, they're both called opportunity zone funds. So those can be for anybody that want to invest. The biggest thing is that I haven't seen any mainstream investments yet. I mean, we're still waiting for the regs, as you know, which we probably won't get to probably after the first of the year. But I think what's going to happen is that there is going to be companies that try to bring this down so that they can take smaller investments. Because right now they're really talking primarily to family offices or those that can put in millions of dollars at a time. So a lot of times these evolve where they'll start with the larger monies that can be invested and then go down so that everybody can actually invest. So I would say keep on the lookout for those. I could see those coming on a lot of crowdfunding sites as well, which that really opens it up to the masses. And then as a small business owner, that's where I think that there's opportunity as well, so that as these areas start to develop and grow, by putting your business into one of these zones, if you're going to start it up and use if you had a taxable investment that you sold, you had capital gains, and you wanted to put it in to start that business within one of these zones, then you could benefit as well.
So it sounds to me like even Bill could put a studio in an opportunity zone and, in 10 years, sell the shares and not pay any taxes.
That's what it's businesses like that, or even tech companies, right? I think are tremendous for these areas. If I was a private equity person, quite honestly, I'd try to get a building, right? Buy the building where I could take care of the tax benefits for that, and then incubate all these small companies within that building. And I think that would be a grand slam. But yeah, I mean, if Bill's looking to move or to go into, open up a studio somewhere, whether that's in the DC area or whatnot, I would by all means look into, an opportunity zone to open it there. I think it's a great idea, Julio.
Let me ask you a question. Okay, I'm a little bit confused. I'm not a tax guy here. So, now these opportunity zones, if I go, let's say that I build a studio in, one of these opportunity zones, and would that affect, how is that going to affect my taxation for my business? Is it going to be a reduction in the taxation on my business profits, on the appreciation of the property? What is the benefit exactly? Is it, after 10 years, you're scot-free? This is something that the average tax person is completely confused by. So, Julio, how does that work?
Well, Bill, I think what happens is you start your studio and you start it from scratch, and really at that point it really has a low value probably, as you're just building it into this new community.
Right.
And then say someone 10 years down the road, Bill, comes and buys your media production studio company for $100 million. I think that, the benefit there is that you're not going to pay any gain from that $0 to $100 million. I mean, I think what DJ was saying is right on track. Look, these incubator companies, these companies that want to get started, they start, these tech companies, right? These kids that start tech companies, and they go in, it's not worth anything. And then they sell it for $100 million because they came up with the newest watches, the newest technology.
Yeah.
They're not going to have any gains. And believe me, that's why,
amazing.
The Netscapes and all these people, the world wanted these opportunity zones, right? They want to put technology companies into these places. I think there's great reward in that, right? Bringing these places back. But at the same point, if they sell it for hundreds of millions in 10 years, there's no taxes.
That's unbelievable. So that's going to drive business to these opportunity zones like crazy, and help with this urban blight and this urban revival by drawing new business investment in these areas, I think.
Well, a lot of times, and what I think's overshadowed, honestly, is exactly what we're talking about. Because everybody that talks about opportunity zones, they automatically gravitate toward the real estate opportunities. Very little, and Julio, correct me if I'm wrong, but usually that's where the focus has been. It hasn't been on businesses, right? So, like Julio said, let's say that you did open a studio and you put, $100,000 to start the studio, or $50,000. Well, if somebody went and purchased this, like Julio said, for $100 million, you only had put in $100,000. So everything between that $100,000 and that $100 million, any gains on that, that's all tax free if you hold it for 10 years. Yeah. And so, I think that there needs to be more emphasis on this, on the businesses the opportunity for businesses.
Yeah, absolutely. Now, who determines where the opportunity zone is? Is this a government thing? Is there a pamphlet that gets sent out? Is there a website people can go to find out where the opportunity zones are?
Yeah, I mean, basically, you can go into irs.gov, type in opportunity zones, and the map will come up, and the map will show you by state where the opportunity zones are. Now, the governors chose the opportunity zones for each state, and they did it based on economics, and that's right online. So you can go online, and I would tell the audience, Bill, this would be an amazing opportunity if you're going to start a business, and you look at the opportunity zone app, and you're like, wow, that's a great place. It's it's near us, and we could start a business there. Yeah. And that company is going to grow, and we're going to become the next best security company. We're going to have the next best pizza company. We're going to have the next best dog, walking company. Yeah. I think that this is amazing, Bill. I mean, look, this people don't know about it, but look, what DJ is saying is, think about this for the billionaires and the millionaires in real estate. But it's for the small business owner in those communities.
Absolutely.
Or near those communities that would love to come in and start their software company. Why not do it there? I mean, think about it, Bill. If today capital gains are 25% and you start a company outside the opportunity zone and you take it from 0 to 100 million, well, 250 million you're going to pay, or 250, what's the math, right?
25 million.
25%, right? You're going to pay in taxes. But if you were a block over in the opportunity zone, you're not paying that. You're not paying that 25%.
That's amazing. That's remarkable.
Right. And I think, why wouldn't you put these incubators in these opportunity zones? Like DJ said, I mean, it makes all the sense in the world.
Well, the other thing too that I'll just touch on, I got a phone call. This was a month ago or so, and a guy had just sold his tech company for $3 million. And he was going to look to open up a couple other tech companies. And this is exactly what I told him, because on that $3 million, he might have had to pay, possibly, $500,000 to $1 million in taxes. Well, now he can use Uncle Sam's money as part of his investment into that business to start his next 3 tech companies within the opportunity zone. And what's interesting is that they went off of old census tract numbers. So a lot of these areas have already started their gentrification, or they've already been starting to expand and develop. And so, you're able to get a head start in a lot of these areas. And I mean, here in Denver, what's one of them that I think is very interesting is that an opportunity zone falls right where the Broncos Stadium is in their parking lot. and so
hot dog stands.
Food trucks.
Yeah. So that's so there's some areas that are really good. Las Vegas is another one I've used an example where the founder of Zappos had already been gentrifying the area near where the old Las Vegas had started. And all you go to a site like Julio said, put in the zip code, or you can see the whole map sort of from a bird's eye view, and it'll be outlined, and then you can just drill down. So it's pretty neat.
Bill, I think what DJ said was really critical. Like we were talking about just a few minutes ago, what if I start a business in an opportunity zone? What's that tax benefit going to be? What if I buy that real estate? But think about what he just said. I sold my company and I had a $2 million gain, I have to give 50% of that, 25% of that back to the government, depending on what the federal and state taxes are, right? And now what DJ is saying is, hey, I can take that money, and instead of paying the taxes, I can take it tax-free, put it into the opportunity zone, start my new company, new co, and I'm not paying taxes on the gains that I just made from selling my company. And now I'm going to be able to take that company, put it into an opportunity zone, delay those gains, and grow a new company and stay in there and have some major tax advantages. What a home run!
That is amazing. And this is something that's brand new in tax reform and the new tax reform bill.
Brand new in the tax reform bill. It really, Bill, I was in D.C. every day working on tax reform. And in the drafts, the initial drafts of tax reform, opportunity zones really weren't in the language.
Yeah.
It kind of got its momentum late from several people that went to Congress, went to Senate, and said, can we do something to help these communities, but give tax incentives? And that's really how it came about. And then the Trump administration really took a look at it, and Trump met with his staff and basically, I think, pushed him at one point to see if we couldn't get this into the code. So it kind of came in at the last minute and got done. So it's one of those things. Typically, the tax code, Congress takes it, makes changes, makes suggestions, then it goes to the Senate, then it goes back to the Congress to ratify. This was one of those things that came in kind of last second from the Trump administration, where I think, one issue from, if I understand the story right, Bill, is that when we had Charlottesville and the issues that came up there, that gave some impetus to say, what can we help do in these areas? I mean, we're not trying to create a bad message here, but can we do something to help these issues? And that's really kind of how it came about, was with Tim Scott up there asking Trump, what can you do for me if I help out with some of these things that happened in Charlottesville? And that's really where it came from.
Fascinating. Fascinating. It's a great idea.
The one thing I do want to make a point of that people don't think about, but so you go in, and Bill, let's say that you've identified an opportunity zone and you want to put your business there. Well, don't stop there, because there's other government programs too, like enterprise zones, that could overlap possibly. And with enterprise zones, you're going to get tax benefits for the people that you employ. So I would say don't stop at the opportunity zone. Look also what other programs there are. If it is real estate, there could be new market tax credits. There could be, a lot of other things that you can sort of piggyback on and sort of just create this layer of tax benefits.
Yeah. Instead of fighting the government, you make government your partner
Exactly.
in what you're doing. Yeah, that sounds great.
Exactly.
Okay, that's it. I'm building my $10 million studio in an opportunity zone. I've decided. I just need the $10 million and we set.
I think you should.
Yeah.
Well, hopefully this show helps inspire that type of activity, right? And it's all about the education, because I think that education is so critical in how we preserve wealth. And I think that's why we put this show together, to have these discussions and make it mainstream, because typically what we see with tax benefits and tax reform and tax code is that, it's for those sophisticated, wealthy families that can, employ the big tax firms, the big tax attorneys to help figure out this code. But look, our goal really is to bring this to mainstream America, bring it to everyone. We want to take that tax code that typically is taken advantage of by the multi-million Fortune 500s and bring it to mainstream. And that's so critical. That's why we have this show, right, Bill?
Yeah, absolutely. Absolutely. The purpose of the show is to talk about tax. It's to talk about finance. You're going to have a lot of guests on this show. This is going to be this is not like Your Voice America, which is sort of like a Hannity news analysis of politics show. This is more of a news magazine that's focused on finance, stocks, investments, taxes, real estate, all these things. And so Julio will be having a whole variety of top drawer guests and interviewing them about what's going on. And of course, we'll get Julio's commentary on the latest thing that's coming out. And he's always up in DC. He knows what's going on up there in DC, and he's got that connection there too. So it's going to be a fascinating show as we go forward. I think we've settled on Tuesday nights for the show, right? Isn't that what we agreed to?
Tuesday nights, we love it, right? Tuesday the show, and then Tuesday tacos.
Yeah, Tuesday night's good because we got Steel Truth on Monday with Ann Vandersteel. And then Monday through Friday, we have Your Voice America at 9. And this will be 8 o'clock on Tuesday nights. And then we've got Mag and Justice on Thursday nights. We're filling in the schedule slowly but surely. So we want to provide between 5 and 7 days of 2 shows a day for everybody. We may take Saturdays off. We need to breathe occasionally. But it's going to be great because we want to build this up into a full network, a day's worth of shows, so that we can, because I know Donald Trump is interested in having a conservative network, and we want to be one of those options for him. DJ, it sounded like you want to say that.
I was just going to say on the weekends, I would run reruns so that people don't get during the week, just, fill those gaps so that people can.
Well, here's what we do. This is how it works. That we do the show, we'll do the show at 8 o'clock at night on the website just for members of the website. And then we rebroadcast it on Periscope the next morning at 9 a.m. So typically, like for instance, this show rebroadcasts today, our last show, night show, rebroadcast today at 9 a.m. And it'll probably do between 50 and 100,000 plays on Periscope, which is a lot on Periscope. Most people are lucky to get 10 or 15,000 plays on Periscope. So this show, we'll do some big numbers on Periscope the next day. It'll do good numbers for the members at night, and that's how it'll basically work. And the beauty of the internet is it's constantly rebroadcasting because once it's out there, it's always out there. So Julio or DJ, you guys can send out a link at any time on your Twitter, your Facebook, or whatever, and boom, it's going to be there. And no matter when they jump in, they get it right from the beginning, right to the end. So it's neat. It's a neat platform. This is why so many people are going to shows like this as opposed to on the TV. Because on the TV, it's on when it's on and it's not when it's not. But with this, it's on all the time. And also when we're live, you have the chat aspect where people can be chatting and talking and sharing ideas and so on and so forth. As a matter of fact, Julio, we may even do a thing called an Ask Me Anything session where we have yourself, myself, maybe an expert get on here, and then you can be watching the chat as it comes in, and people can be asking you questions in the chat, and we can be responding to people live, do a live show, responding to people's questions. So lots of cool opportunities.
Well, Bill, I'm appreciative that you put this kind of content out there in education, because I think there's so many small business owners and people that want to invest in small business, and it's just having these little tips and advice that really can help them start and launch. And what DJ said, I think, was also really important, is that it doesn't stop with the opportunity zones. Every state, every county, every city has additional incentives. There's additional federal incentives, and sometimes you just got to ask. Sometimes you got to ask the city, if I bring employment here, what can you do for me?
Right.
And I think just knowing that you can ask and that there's things out there is important.
Absolutely. Julio, now how can people reach out to you at your company to get advice? Do you have a website? Do you have an email that you'd like them to reach out to you? Do you have some other way of connecting?
Yeah, so best way to get a hold of me is at J. Gonzalez at engineeredtaxservices.com, and our website, engineeredtaxservices.com.
Fantastic. And how about you, DJ? How can people reach you?
Well, a website where they can find all my contact information is at simply djvankuren.com. So DJ V as in Victor ANKEUREN.com. Yeah. And that is where they can get all my contact information.
Right.
The email that's probably easiest to get me right now would be dvankuren at HeymanFamilyOffice.com, HAYMAN FamilyOffice.com.
Fantastic. And DJ is at DJ Van Kuren on Twitter, and Julio is at Tax Reform Expert. And I tell you what, I'm jealous. Julio's had some tweets out there, get 3,000-4,000 likes on them. Talking about politics, taxes, that sort of thing. So that's become a hot feed. I think he's got like 15 or 16,000 followers now, and just had maybe just a couple thousand followers a few months ago. So he's doing great and growing like crazy. So definitely follow these guys. They've got good advice. I know that Julio's got good, he's very involved in politics. He doesn't hold back. Good commentary on politics as well. Julio, one quick question. Engineered tax services. People hear that name, is like, what is that? What is it? What is it? What is an engineered tax service? What does that mean?
Well, we focus on real estate and manufacturing tax benefits that require engineering and scientific evaluation. So we do niche tax services that basically are federal based but require an engineering or scientific type of science. So we have this really niche tax group. We work primarily with CPA firms, real estate investors, manufacturers of any type of product, whether it's software, drugs, widgets, apps, things of that nature. And just so real quickly, Bill, research and development tax credits, that's an important tax credit here in the United States. It's a refund of labor by the federal and state governments. It's basically to incentivize keeping U.S. labor here in the United States. And basically what we do is, from a scientific standpoint, we determine how much labor a company has that's involved in manufacturing processes and make sure that they're getting those refunds so that we keep those jobs here in the United States. A very important tax benefit. On the real estate side, when you buy real estate as an investment property, the best thing about investing in real estate is it's one of the few investments that you get to expense, right? So if you buy stock, you don't get to expense it. If you buy bonds, you don't get to expense it. But if you buy real estate, you get to expense it. And here in the United States, you can expense real estate over a 30 to 40 year period based on the type of real estate. That's one method. The other method is to do a cost segregation study, which is to determine what portion of the building is non-structural. And typically that can be anywhere between 30 to 50% of a building. And that portion under the new tax reform can be written off immediately, whether it's a new or used building. Wow. And you can also go back so that if you've had a building over a 10-year period, that you use the traditional method, you can change that method at any time and take the benefits that might have been missed over that same period. I think real estate is one of those best ways to preserve wealth because you get to buy something, it's an investment, it goes up, it generates income, and you also get to expense it. And under cost segregation, you can expense a lot of it up front. So it's just one of those tremendous benefits here in the United States. And, those are things we'll talk about in the upcoming shows as to why people invest in real estate and what the tax benefits are from that standpoint.
Yeah, I tell you what, if you're a small business owner, if you're a big business owner, if you own a lot of property real estate in your businesses, you need to reach out to Julio Gonzalez, and he's got found money there. You're sitting on a gold mine that you may not even be aware of as far as your tax write-offs, to figure out a way to move the pieces around on the chessboard and to save a lot more money from what you're doing, because your biggest expense when you're a business owner is Uncle Sam paying your taxes, and he can reduce that and increase your return on investment, increase your income, and increase the money you keep to reinvest in your business and to grow your business. So definitely at engineertaxservices.com. That's the website, right?
That's the website. And again, really, we've strived over the past decade to bring these billionaire type strategies to mainstream America. Yeah. And we try to do that more and more every day.
Yeah, fantastic.
And Bill, one of the things I do want to emphasize, and Julio sort of just brought this up about all these great tax strategies. I mean, in some ways, if this is the first time you're hearing it, it may sound very sophisticated and thus sound very expensive. But the reality is that it's not. And also, you're going to make whatever it costs multiple times over. And so I want, anybody that's listening to this to say, hey, you definitely need to explore it, because, it's sort of like, look, if you give me a quarter, I'll give you $1. Anybody would do that. Right.
Yeah. It's smart. Rich people don't get rich just by making it. They get rich by keeping it. Mm-hmm. And that's what guys like Julio and DJ do, is they help the people that want to be prosperous in this country keep more of what they make. And that's absolutely key. Well, guys, this is Julio's show, so I don't want to say goodbye for everybody. But Julio, I guess that's our first hour. Thank you for hosting this new show. I think it's going to be absolutely wonderful.
Well, Bill, thanks for the opportunity. We love being on your network, your voice network, and we're excited to continue to bring this type of education on a weekly basis. And, our goal is to make a difference in how people preserve their money. And I'm excited to do that over the next every week.
Yeah, I'll tell you folks, the big difference between this show and what you see like on the news shows, CNBC and stuff like that, when you get a financial expert on there, they're going to have 2 or 3 minutes to give their spiel. You come on this show, I mean, Julio could have somebody on for a whole hour if he wanted to really dive deep into subjects as opposed to just, glossing over them a little bit. So it's going to be something that you can't get on the TV show. So, well, Julio and DJ, thank you, guys. Appreciate it.
All right.
Fantastic. And we're going to go ahead. This show will be on this Tuesday night coming out because we want to stick with that right away, not throw everybody off on the timing. So we'll run this on this Tuesday night coming up. I hope everybody enjoys it. And folks, after this show's over, make sure you turn into Your Voice America on yourvoiceamerica.tv. Take care. Have a good night. Thanks. Thanks, Julio.
Good night.
Thank you.